Commercial property prices are expected to fall in the next 18 months as distressed mortgages are sold and banks rework problem loans. Still, Paul Curbo, portfolio manager of the top-rated AIM Real Estate Fund, says there are good investment opportunities in commercial real estate. Paul, thanks for coming in and joining us today. So I mentioned that 18 months outlook. I've seen some figures that say that commercial real estate is going to fall as much as 90% this year from 2007. So with all the dismal projections out there, why are there still good opportunities? Why would you want to come in and buy right now?
Well, for what we do and what we invest in, it's generally commercial REITs, so principally in the U.S. And so they're based on stock prices, are forward-looking. And so a lot of the decline in the real estate market that we're seeing in terms of the price declines already occurred in the REIT market at the end of last year and the beginning of this year. So I think the prices on the public market generally reflect that view. If you look at it, peak to trough, the public real estate market is down about 75%. That would imply on the order of about a 40% decline in property prices.
Now, at the same time, peak to trough, we had this big decline. But if we're forward looking, a lot of these stocks have come back already very strongly. Just looking at some of your top holdings here, Simon Property Group, 180% this year alone. Public Storage, 64%. SL Green Realty, more than 400% is the advance we've seen in that stock. I shouldn't say this year, I should say since March, when these stocks bottomed out.
Right.
So have we not already seen the gains?
Right. I think the difficulty was at the end of last year and the beginning of this year, and really the trough back in March, was it was very difficult to value an equity security when capital was quite limited. If you cannot roll over your debt, if you cannot roll over commercial mortgages, then valuing the equity became very difficult for shareholders. I think now that the commercial mortgage market has improved to a certain degree, spreads have come in somewhat, the overall improvement in health of the economy, and most importantly, the companies have raised equity capital and issued unsecured debt. I think that gives investors a lot more confidence that they're going to be able to make it through the downturn and come out on the other side.
Paul, might I ask, we have a story on the Bloomberg terminal today by our Sarah Mulholland, and she points out that yields on bonds backed by hotels, shopping mall, and skyscraper loans fell relative to benchmark rates. What's this telling us about demand for risk?
Well, I think those spreads have been coming in all year long. I mean, you look at the different programs, the PPIP program, the TALF program, all of those are designed to get legacy spreads down. In order to jumpstart new commercial lending, those spreads have got to come in. And so this is really the first step. I think we're seeing that. We've seen it all year long, really.
Is commercial real estate the one thing that you feel got lost in all of this talk? Because it was about, Americans and foreclosures, having problems with their mortgages, but real estate seemed to be commercial real estate, the elephant in the room that people weren't talking about that much.
Well, from my perspective, people were talking about it quite a bit.
From your perspective,
sure.
Yes, but given the overall economy.
Yes. I think there were some mistakes made in terms of, the amount of lending that was done and the low leverage levels that were used. I think that those are being rectified and will be rectified over the next several years. It's not a quick fix. Ultimately, real estate is going to be dependent upon the overall economy. So when we start seeing economic growth and employment growth, that's really what's going to improve real estate overall.
I want to get to some of your picks. I mentioned Simon Property Group. This is a retail REIT, a shopping mall REIT. We had a story today on the Bloomberg talking about how some of the highest priced real estate rents, retail rents, have really fallen sharply. So why look at a mall operator right now?
From the fundamental side, I think that there's still going to be some weakness. I think consumers are obviously consuming less, and so that's ultimately going to be impacting how much tenants can pay in terms of rent. But I think if you look at Simon Property Group, very strong balance sheet, roughly $3 billion of cash on hand, $3 billion of access on their lines. They're generating free cash flow this year of over $700 million. So I think there's distress in the retail environment. There's distress among retail landlords to a degree. I think Simon is one that can actually capitalize on some of that distress.
Paul, very quickly, you see credit starting to ease. It's loosening just a bit?
Yes, I would say it is easing. I would say, we've still got a ways to go. If you look at AAA CMBS spreads. They peaked out in November of 08 at 1,400 bips. They're down around 475.
Yeah.
That compares to 35 or 40 bips pre-Lehman.
And Paul, we're going to have to leave it there. Paul Curbo, portfolio manager at AIM Real Estate Fund, joining us this afternoon. Paul, thanks so much.